Hey Simon, the US dollar has been rebounding from early January. Does this change your bearish dollar strategy?
The US dollar rebound from the start of the year has not been surprising. We had been writing since late last year of the possibility of a counter-trend rally in the US dollar amidst very technically oversold conditions. And that is what we believe we have been seeing lately. Now, bear in mind, there had been a lot of short positions in the US dollar, and the recent rebound have been driven in part by short covering. But we believe that what we're seeing is simply an unsustainable bounce within a broader downtrend. So over time, we should see this as part of a series of lower highs and lower lows.
Why do you think this bounce is unsustainable?
A big factor is rising US inflationary expectations. At a very general level, deflation can be supportive of the value of a currency, given that the currency buys more goods and services. The reverse is also true. That is, inflation reduces the value of a currency by diminishing the amount of goods and services the currency can buy. And that appears to be the dynamic at work in the United States at the moment with the US dollar, except it is inflationary expectations rather than actual inflation that is driving US dollar weakness. Note how historically there's been this inverse relationship between the trade-weighted US dollar index and US inflationary expectations, as measured by what we call the 10-year US break-even inflation rate. And note that more recently, rising US inflationary expectations over the year 2020 have been driving down the US dollar index.
But why are US inflation expectations going up in the middle of a pandemic? Aren't pandemics supposed to be deflationary?
Great point, Shunai. Yes, historically, pandemics have tended to be deflationary because they destroy demand. Wars have historically been inflationary because they destroy productive capacity. Now, this pandemic has been very different from others. The US government has replaced almost all lost income through massive welfare spending, pushing the size of its deficit to historical highs. And the Federal Reserve expanded money supply by unprecedented amounts to fund that government spending, as typically happened during wartime, and that is inflationary.
How does the election of Joe Biden as President of the United States play into your thinking about the US dollar?
This will be a big spending government. President Biden has already proposed a 1.9 trillion US dollar pandemic stimulus package. That is more than double the previous package offered by President Trump. And the new US Treasury Secretary Janet Yellen has essentially told the world the US government would throw open its wallet with no fear of the debt consequences. Indeed, she said, with interest rates at historic lows, the smartest thing the US government can do is to act big on stimulus and spending. Her line about interest rates is important. Debt sustainability requires the cost of borrowings to be lower than the nominal GDP growth rate. So the US has every interest in keeping rates and yields low for a lot longer. That is going to drive inflation expectations even higher, putting renewed downward pressure on the US dollar.
What are the trade implications of this?
Now, we have said this before, and we continue to say this. Sell the dollar bounces. On the equities front, this is good for ex-US stocks, so overweight emerging markets and Asian stocks.